Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a different topic from the world of investment and attempt to apply the lessons as laid down by its founding father, Benjamin Graham, to the problem at hand. In this edition, we're once again going to try something just a little bit different. A little bit more dramatic than usual, but I hope just as relatable. We're about to explore value investing through the lens of the 7 deadly sins. Yes, the very same sins those medieval monks warned us about are alive and well on Wall Street. Actually, they're thriving. Benjamin Graham taught us investing is not all about cleverness. It's about character. And nowhere is that clearer than when investors fall prey to these timeless temptations. So in this episode, we shall take each sin one by one, hear how they whisper to investors, and learn how Graham's principles help us to resist them. So without further ado, let's begin. As always, sit back, strap in, and get ready to take on board another timeless lesson in value investment as inspired by Benjamin Graham. Pride, the first amongst the deadly sins. The voice that insists that this investing game is easy. Well, that's pride talking. It whispers, you're smarter than everyone else. You can pick the winners with little effort and even less research. Pride convinces investors to ignore the facts, skip the boring analysis and trust gut feelings. Picture this. A new investor reads half a blog post about growth AI stocks and suddenly believe they've unlocked the secrets of the investment universe. Pride tells you that you don't need someone like Graham to show you the way. For intrinsic value and margin of safety are for mere mortals. Pride tells you you've got something more important than that. You have intuition. And this is exactly how people end up buying companies they don't understand. Graham warned that arrogance will be an investor's undoing. He believed that the market can humble anyone, no matter how brilliant or average, if they're not prepared to put in the hard work. And the antidote to pride? Intellectual humility, research, and a willingness to concede that you might not yet know enough. Graham himself, despite being a financial giant in his field, always assumed he could be wrong. And that is why he always insisted upon a margin of safety. Next up, we have good old greed. Why settle for reasonable returns when you can chase something outrageous? Greed is the investor who wants 100% returns every month, preferably by Friday. Greed makes people chase hype, tips, rumours, and currently anything to do with AI. Greed insists we forget about research. Just find the hottest stock, the one that everyone else is screaming about, and buy it now because it can only go up. And of course, those are the famous last words for many a portfolio. Graham warned investors never to confuse speculation with investment. Greed blurs that line until it disappears entirely. When greed takes over, fundamentals no longer matter. Debt levels don't matter. The only thing that matters is the dopamine rush of a quick profit. So what is the antidote to greed? Stick to Graham's advice, seek reasonable returns, avoid seduction, choose businesses not fantasies. Greed thrives in dreams, value thrives in reality. Now enter from the stage door left, the sin of envy. Envy strikes when investors compare themselves to others. Why do their stocks always seem to go up? Why does their portfolio look so glamorous? Are questions you might well hear from someone struck down by this particular deadly sin. They operate not on strategy, not on long-term goals, nor risk tolerance, just bragging rights. If your cousin or your neighbour made 300% on a biotech meme stock, envy tells you that you're falling behind. It tells you to buy the same thing, copy their moves. Envy fuels bandwagon investing, buying simply because someone else did. But as Graham pointed out, You are neither right nor wrong because the crowd disagrees with you. You're right because your data and reasoning are right. Value investors ask, is this company inherently worth its price? Do I understand it? Is there a margin of safety? Envy, on the other hand, doesn't ask any questions. Envy just wants what others have. Wrath. Okay, wrath is the voice that proclaims the market has betrayed you. I'm down 8%, sell everything now. Wrath is the emotion that pushes investors to make impulsive, emotional, destructive choices. It shows up in every sell-off, every correction, every red morning. Wrath makes people treat investing like revenge. If the stock won't go up, then it deserves to be punished. Let it rot. Graham's writings are filled with warnings about emotional-driven decisions. He taught that markets swing wildly because of the combined overreaction of millions of wrath-possessed investors. But price drops aren't personal. They're not insults. They're opportunities or noise, nothing more. A calm investor asks, has the intrinsic value changed? Or is this just run-of-the-mill volatility? But wrath never asks questions. Wrath reacts. Sloth. Benjamin Graham's The Intelligent Investor runs to almost 700 pages, with his other book Security Analysis topping 800. Too long, didn't read, just tell me what stocks to invest in. Those are the words of Sloth. Sloth is the investor who wants good results without the effort. They want the shortcuts. Tips: top 5 stock picks for instant wealth lists. And Sloth hates reading financial statements, hates learning, hates thinking. Why analyse intrinsic value when someone on YouTube can do it for you? Why understand the business when the stock charts look fine? But of course, sloth leads to ignorance, and ignorance leads to loss. Graham repeatedly emphasised the need for discipline, patience and research. Not endless research, but enough to know what you're buying. Because buying a stock without understanding it is like picking a life partner based solely on their profile picture. Study is indeed hard, but losing money is harder still. Then we have our friend Gluttony. Gluttony just wants ever more stocks. It wants to diversify until it can't remember what it owns. Gluttony believes that if a little diversification is good, then infinite diversification must be amazing. Gluttony doesn't buy strategically. Gluttony buys everything. ETFs, great. Individual stocks, sure. Commodities, why not? Crypto, you can add that too. Gluttony's portfolio has over 300 lines, I think, although I haven't checked. Benjamin Graham believed in diversification, but intelligent diversification. Too many holdings dilute judgment, dilute returns, dilute accountability. Owning everything means understanding nothing. Gluttony doesn't invest, it hoards. It might feel safe, but true safety comes from knowing what you're doing, not from owning everything you can find. Finally, we have lust. And I'm sure you're wondering exactly where I'm going to go with this one. Lust isn't just about people, it's about seductive stocks. Glamorous, fast-rising, charming, speculative rockets that promise the world. Biotech breakthroughs, AI moonshots, EV startups with a single prototype, and a $30 billion market cap. Lust doesn't think, doesn't research, it just imagines the possibilities. It imagines you and I on a yacht funded by infinite returns. But every single bubble in history is a love story gone wrong. Graham warned against falling in love with a stock, any stock, because love is blind. Love ignores red flags. While value investing asks, what is the business actually worth? What are the risks? What is the margin of safety? Lust doesn't bother with such questions. Lust is just after a speculative fling. while the value investor is in the habit of practicing long-term commitments. And so there they stand. Pride, greed, envy, wrath, sloth, gluttony, lust. 7 forces pulling investors away from rationality, from discipline, and from Graham's teachings. But here comes the part that Graham emphasised the most. The market's biggest dangers are not external, they're internal. The investor's worst enemy is the investor themselves. The 7 sins don't live on Wall Street. They live in all of us. And that is why value investing is not just a financial discipline. It is also a moral one. I too have heard their whispers, and nobody is immune. And whilst we continue to be a poorly evolved mammalian species, equipped with prefrontal lobes that are too small and adrenal glands that are too big, investors will continue to fall into these traps. But I choose differently, and you can too. This is the heart of Graham's philosophy. Rationality over emotion, character over impulse, discipline over desire. Value investing is not glamorous, but it is steady, principled and wise. And on that we close this edition of Intelligent Investment today. But before I go, just consider this. Every investment choice is a moment of temptation, a moment where emotion whispers one thing and wisdom whispers another. Benjamin Graham didn't just teach formulas or valuation methods. He taught temperament, because investing is 20% intellect and 80% emotional control. So the next time you feel the pull of pride, telling you you're a genius, greed promising easy riches, envy making you copy others, wrath pushing you to panic sell, sloth tempting you to skip research, gluttony filling your portfolio, lust whispering sweet nothings from a speculative stock, remember you have a choice. Choose the path of patience, analysis, humility, rationality and value. Choose the path taught by Benjamin Graham. And leave the sins where they belong, in stories, not in your portfolio. If you've enjoyed the show and thought it worthwhile, do consider subscribing or adding to your playlist. And do continue to spread the word so we can make our group of like-minded investors as large as possible. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.